Imagine standing on a bridge built by generations before you. It's sturdy, but the river beneath is changing, fast and unpredictable. That's the state of our industry today, not collapsing, but navigating turbulent waters where adaptability isn't optional. Today, we won't just reflect on where we've been, we'll confront the challenges head on and examine where we're going with both grit and clarity. The numbers tell a story, but the harder truths often lie beneath the surface. Yes, in 2024, the United States reached an all-time record in crude oil production, averaging 13.2 million barrels a day. It's a historic accomplishment, driven by incredible productivity in the Permian Basin. But the milestone comes with a caveat. When you've already tapped the richest and most productive reserves, how do you make the rest sustainable? The Permian remains the workhorse of our domestic production, but focusing on its richest acreage creates long-term risk. Depletion of the most productive wells could lead to sharper declines in output, forcing a reckoning for how we strategically manage what's left. While oil thrives, natural gas paints a starker picture. Production in early 2024 dropped by 5 billion cubic feet a day. And in the Permian Waha hub, gas prices dropped to a near zero or sometimes even negative. Why? Infrastructure bottlenecks and takeaway capacity constraints. These aren't just operational hiccups, they're systemic challenges reminding us that success often involves solving problems beneath the surface. And then there's the pricing landscape, a constant reminder of our industry's volatility. Most recently, Brent crude slipped to $66.30 to $66.53 per barrel, while WTI fell to $63.20 to $63.67 just days earlier. Both benchmarks were rising, buoyed by optimism from geopolitical developments like the U.S.-China tariff truce and a weaker dollar. But markets, as they do, quickly turned as profit-taking U.S. inventory builds persistent concerns around demand brought those prices back down. These aren't just numbers. They're the current shaping decisions across operations, investments, and long-term industry strategy. Yet amidst these complexities, there's strength and discipline. U.S. independents are holding production steady while cutting capital expenditures, focusing on efficiency and shareholder returns. Take Permian Resources' recent $608 million acquisition in the Delaware Basin. That's not just a transaction, it's a commitment to precision over volume, a reflection of how companies are shifting from growth at all costs to smarter, more thoughtful strategies. Globally, the story is the same. The LNG market is becoming a battleground for the future. Companies like Woodside and Aramco are investing billions into LNG facilities, knowing that these moves could secure their place in tomorrow's energy markets. These aren't just reactive decisions, they're bold, forward-looking actions designed to create resilience in an unpredictable world. Here we are, balancing remarkable achievements and undeniable realities. Our industry isn't just navigating change, we're rebuilding how we operate from the ground up. This isn't just about output or headlines, it's about a deeper, lasting commitment to transparency, innovation, and sustainability. The future of this industry won't be defined by bravado, it'll be shaped by disciplined leadership, by the daily decisions we make to solve hard problems, build smarter systems, and invest in what matters, not just for the next quarter, but for the next generation. I'm Mark Roach, and this is FutureWise Energy. Behind every statistic is a story, and behind every story is a strategy. Together, we're not just fueling the world, we're shaping its future. And that future, it starts with the choices we make today.